Greetings, greetings, greetings. You are now tuned into the vault. Trust Christian, know not to control everything. Just want to thank you for tuning in live, listening to replay. Always appreciate everybody that tunes in live, listens in the replay. This is the vault, episode 455. Prediction 2023 outlook. Definitely wanted to do this episode very early on in the year so we can go ahead and say we marked our words. We put in the work and we're gonna go over some goals. And we're gonna talk about some things, but let's just go ahead and put up on the screen that we actually have a conference, Family Asset Protection Conference, Family Asset Protection Trust Conference coming. Excuse. Actually, have a Family Asset Protection Trust Conference coming up, and this is gonna be a good one once again. We actually have a special guest speaker, third generation. Familiar with the system when you talk about having a family family trust, or when you talk about them having uh, private family foundations. Very familiar with it, so it's going to be exciting. Very good experience to be able to get them in front of other people. They also are an investor, private equity, so you get to see as well. Them being able to have capital to allocate towards projects, depending on where you are in the country and if the deal is any good. So we're definitely gonna go in this episode here. Family Asset Protection Trust Conference. This is one of those things where we're going to talk about the outlook actually at this conference. The prediction for 2023, we could talk about it from a macro level, and that's where we're really going to stay. Not going to really jump down too deep into actual companies and their balance sheets and whether their book balances are good or any particular asset class. Uh, because when you look across the board, is when you look at oil. Well, they said they wanted $120 oil last year. Well, oil's been hovering around $80 at the beginning of the first quarter here. So are we going to go see it run off the 120, or are we going to see it just continue to keep going lower and go down to 64? We're going to see first quarter play. Definitely see some opportunities there in the first quarter with oil. When you talk about gold, we probably don't want to see too many things touching gold. Uh, we don't really want to see it. This is a market prediction 2023. We got to make this the market prediction, you know, because when it comes down to it, the market is what we're trading here or what we're dealing in. People say, "Oh, I'm trading this, I'm doing this, I'm doing that." Okay, are you aware of the different markets? So once again, we talked about the oil, we talked about the gold. Uh, or even recently we saw these goofballs on the news say, "Oh, well, Europe might have a better strength over the near term as opposed to the States." Ladies and gentlemen, the States has shown why they are a mammoth and a titan still to be dealt with. When the American companies have cut half their staffs, have cut staff, and are still able to produce the same level or above shows that they are resilient, not just at the consumer level, but also at the corporate level. So we see that kind of rolling out here over the first quarter and maybe throughout the year. You just see that the American uh, uh, CEOs, entrepreneurs are very resilient. They know how to pull water out of lemons, and so that's what they do. When you see how at a corporate level, high level, Fortune 500, they've cut the staff, whereas other companies have either gone out of business. You see entrepreneurs flip into new business. They pivoted into new businesses. You see a lot of that going on, and so the mom and pop the small entrepreneur, the 80% of the business population in the states, you see a lot of pivot, you see a lot of change, you see transition. You see people selling right now. They've asked about M&A throughout the years. Oh, is it there? They're asking, well, oh, is it the banks? Are the banks gonna, are they lending right now? Well, of course the banks are lending. It doesn't matter. Why wouldn't the banks be lending? The banks were lending at 2%. They were lending at 1%. And guess what? Banks have to lend at 4% now. They have to lend at 5%. They have to lend at 6%. They have to lend, ladies and gentlemen. Banks get paid on lending. Just because the money costs more doesn't mean that they're not lending. So this once again goes back to hard times. Oh, how do we get the money? You get the money by going to the banks. Bottom line. If you're not going to banks, you're not going to get the money. So we don't the banks are kind of finicky on what they're going to report in their earnings, which is good to see what their earnings are going to be here first off in the first part of the year. Um, Ladies and gentlemen, the banks are always going to give you the skewy numbers because they're almost insider run by the central bank. They're able to sit on deposits. They're able to lend out credit, whereas a traditional business has to focus on making sure that it sells products. A lot of these companies, they're almost willing to eat a credit card debt. So it's different for a bank than it is for a uh, uh, traditional company. So um, they say, oh, China's supposed to reopen. It's been a debacle. China's supposed to reopen. It's been a debacle. Well, guess what, ladies and gentlemen? See, it's winter in the northern hemisphere. It's not winter in the southern hemisphere, ladies and gentlemen. It's not. So when it's our winter in the west, it's summer in what they call the east. And when it's winter in the east, it's summer in the fall, summer in the west. So, oh, we didn't have to take that into account. Yes. So, whether there is a reopening, whether there's the zero COVID policy's been lifted, are we going to see one of the stronger economic engines get back to work? That's what we're going to see. We're not going to see much more than the largest manufacturing country go back to work en masse, and maybe or maybe not they have a cold problem or virus problem in their country. Maybe. Um, when you see tourist destinations, they're probably going to do strong around the world. Bottom line. You're seeing the world what they call open back up. We're seeing the renaissance of 7 billion plus people on the world in the world, and quite a few are working. Quite a few are in developed countries. Quite a few are in developed countries that are trying to live a developed country or a first world country lifestyle, and in turn, um, we can see tourist destinations just continuously staying strong throughout, like they did in the pandemic. They're gonna stay strong to and beyond. Once again, this is one of those years in the market when you see 2023, the market prediction for 2023 outlook. This is one of those years you're gonna look back and say, "Wow, those that one went by faster than the first two of the 20th, or the decade," because it had it was one of those things where they're going to blame, oh, we didn't know the sentiment of the market. You're going to hear populists, oh, we didn't know the sentiment of the market. We didn't know whether it was going to be hot or cold. We didn't think it was going to be a complete bull. That's what they're going to say. We didn't think it was going to be a complete bull. Okay. Well, right now, the market is on a rally. That's the bottom line. Now, do you see strength in it? Maybe or maybe not. But what we do see is opportunity. And that's why it's so interesting to see this Family Asset Protection Trust conference, because we walk into this conference knowing that we're looking to have not just equity, but we're looking to create value in the first quarter of the year, first half of the year, and beyond. And the way that you can predict the future is by creating the future. And the way that you create is by putting yourself in position where you're in advantaged and leveraged positions in your favor. So some people ask, well, what about bonds? We talk about those things because those are asset classes. What we see in bonds is a mixed review once again. Could it go up? Could it go down? Sure. We don't like those type of things. Those things are slow movers, and you really have to do your research. You have to be sitting there watching them quite frequently. When you talk about individual equities, sure, there are going to be some players that are going to win, and then there's major companies, top Fortune 100 companies that are swinging across the board. They are swinging across the board, tech companies, but that's to be expected. They had a lot of cheap money in previous years. They're now borrowing money, or now they have money that sit on their books that costs 200 basis points more, or 300 basis points more, or 400 basis points more. The money costs 400 basis points. If they got money at a loan that was given a 1% interest or 2% interest, they're in the loans now at 5%, 6%, just because the value of the dollar and these companies had to raise the rates because they were at adjustable rates. They weren't just at rates of, oh, you got an open rate of 1%. No, oh, you got a flat rate of 1%. No, some of them may have had adjustable rates. And so now you're seeing some of these companies may tank because they may have a loan called. We don't know. We could see. Um, that's fine. So let's move into the world consumer. Well, the consumer, you would like to think, has gotten beat up over the past 2 years. Somehow, this bloody mother suffer has made it through 2 years of either not working and getting a full year's salary, or this is what they say. They say if you continue to work, you're almost burnt out. And now you do want to go on vacation and go on a hiatus and go on a sabbatical and see what else is available to you in life. So we're seeing still the luxury end not fall off. Of course, they would like to say, well, how's the luxury end doing? First of all, ladies and gentlemen, as of recent, there's been a switch on the Forbes list, which you can take this with a grain of salt. Uh, has switched from the world's richest man, quote unquote, publicly, is not the Tesla guy anymore, Elon Musk. It's actually Bernard Arnault, who owns luxury brands, LVMH. Owns the subsect of Gucci and these different type of brands that are under this umbrella, a conglomerate. It's a luxury goods conglomerate. And so as you can see, do you think, how do you get to number one spot? You get to number one spot because the market demands that you're number one worthy. May have taken them years, sure. We're talking about what has happened because the market has had pent up demand for luxury goods. They say, oh, what about real estate? Someone that recently kept asking us about real estate. What do you think about real estate? Ladies and gentlemen, we could almost go pull up the numbers right now for real estate. They haven't fallen off out of a cliff. They've fallen off, no doubt about it. They've fallen off in correlation with the stock market. How about that? They've fallen off in correlation with the stock market. Are we going to see markets expand rapidly in real estate? Maybe not. Maybe not. Maybe we don't see the markets expand rapidly in real estate, but we do see them hold strong, hold steady throughout 23. Think about it, ladies and gentlemen. How many of you all want your housing price to go down? Most people don't. And for that reason, there's a demand for houses. Not just, oh, well, the housing price is going to go down. That means the seller's trying to sell. But other than that, no one wants to see the housing prices go down right now in the public. And that's why we've already predicted it. Because that's definitely going to be the case. People don't want their housing price to go down because they want to sell at the height of the asset. They want to sell at the height of the asset. That's fair. Are they doing that right now in 2023? So are we seeing a transition in the housing market? Maybe we see a flat rate or flat on new builds, but we still see a strong, robust selling of houses to who? Funds, private buyers. We're gonna see. Are they just private buyers in the private sector? Market prediction 2023 outlook. Well, we talked about housing. Well, is it going to go up? Is it going to go down? Once again, we call flat. It may not go up a lot, but think about it. If your housing price stays the same, you'll be happy with the housing price just staying the same and selling at the price that it's at right now. But anything lower than that, most people aren't going to be happy with. And they don't want to go lower than their current comps and their current price that they have, what they think is asking price for their properties. So we're definitely in a renaissance right now where we can see whether it's people wanting to still maintain home ownership or we're seeing the yuppies be yuppies and they want Uber everything. Uh, and we're going to see that uh, going into 2022. I mean, 2024 from 2023 because right now we are in a tech transition still. We have just seen more tech layoffs than we've seen in 5 years. Now, granted, cheap money, that's fair. But we talked to someone even in tech today and said, well, they're not laying off programmers, they're laying off salespeople that weren't doing what? Generating sales. Because these companies needed to be generating sales. And are they generating sales? Well, we can see most of those companies weren't generating sales. So now we see that guess what? These companies got to produce product and sales, service and sales. Okay, that's in the tech sector. Outside of tech sector, where are we at mom and pop? Well, mom and pop says you're just going to have to get a loan at a higher rate. Can you get the loans? There's available. They're available. But they're available at a higher rate now. Right now, you're getting loans at 4% plus, 3% plus, 4% plus. There was a time in the past 3, 4 years where you get loans at 2% or less, 2.5 or less, non recourse loans, things of that nature. Now, we're in an era where money may not be so cheap for the next year or so. So, we're going to see how cheap money is. Money hasn't been cheap for the past year. The dollar has had a rally and a tear against all currencies. And now we're seeing where the smart pundits on the news are saying, hey, well, we're going to say that the other currencies are going to go ahead and just beat up the dollar and go ahead and beat up the dollar. And if you think that, have fun with that. But you can get your face ripped off in the public markets when you're talking about going against the dollar here in this year, which, once again, why would you be doing that? Would you be doing it because you're aware of the emerging market that you're looking at or the market that you're looking at, the currency that you're looking at? I just don't like the dollar. Well, once again, the dollar has been on a tear in a rally for a while. And of course it's had its down moment here, but it's still pretty strong and consistent. We'll say that much. So you're just in a choppy market right now, just like the gold or anything else, and we see that. So uh, as far as what we can see in sectors, once again, or even still macro, um, once again, you see a lot of supply chains that were supposedly for semiconductors. Semiconductors are pretty much, major tech weight, heavyweight in the stock market. You look at, the Taiwanese semiconductor company. I mean, these companies are $100 billion companies. So they're building factories. Maybe some companies are going to insource, some countries are going to outsource. Uh, you're seeing once again China possibly getting this engine going over there as far as just consuming, not just developing and manufacturing, but consuming, luxury goods, once again, products, things of that nature. But once again, you see these tech companies, these, what do they call them? These semiconductor companies. We're going to see how that plays out here. That really is going to be a big deal. Once that supply chain is actually fixed, we're going to see electronic boom go back again. You could see that maybe 24, 25 if they have to kick it that far out. From what we can see, we can just see that whether there is a lag on building tech foundries, hey, that's the issue that you can see. It doesn't take overnight to build some daggone factory, okay, for building these materials for these semiconductor chips. So it is what it is, ladies and gentlemen. When you say, well, how long is it going to take them to build these semiconductor chip plants? We're going to see. But from what we can see, that obviously has held up cell phones, that's held up new cars, that's held up, speed of a growth of electronic products and development and things of that nature. So we're going to see continue to see innovation, and when that supply chain is fully open back up, we're going to see a lot of other supply chains be fully open back up because that is a major supply chain issue right now, or has been what they say as a major supply chain issue. Oh well, semiconductors. What about semiconductors? And then that leads over to your cars, and that leads over to your consumable products and things of that nature. Computers. They say personal PCs were booming in 19. They say personal PCs were booming in 20. Well, okay, we're in 23. What was the fall off in 22? And one of them definitely post pandemic has been the semiconductor companies. Whether they're dealing with China not being open in semiconductors or whatever it is. So they're trying to figure out semiconductor independence at this point, we could almost say. And we'll see that through 23. Do we see any major shift in that? Once again, we do see possibly some type of if we see supply chains open up, if we see some type of the mass production or major production of semiconductor chips, that is going to be a major thing because that's just going to show that their supply chain continuity back in the market, and semiconductors are pretty much what you need for a lot of products, whether it's PCs, cell phones, cars, consumable products. These are things that that's going to be a big issue going into and riding out this wave. So it's still getting the product made, selling the product, and things of that nature. So we'll see, and that just deals with supply chain, not just for semiconductor, but supply chain across the board for whether people want to buy apparel, um, whether people want to buy, uh, miscellaneous goods. Um, you know, the biggest thing is the consumer going to continue spending like they have shopaholics, whether that's online or not, like they've been for the past 2 years. Now you could say, oh, they've been spending for the past 2 years. So if they were spending for the past 2 years, why did these tech companies just offload their business, their biggest expense? Employees. First of all, you need employees to grow the company. You need employees to handle problems, solve problems. So if these companies that just benefited from people sitting at home and utilizing this technology, these technological products, why would they cut half their staff? Because a lot of these companies weren't selling products in the public throughout the pandemic. Once again, these tech companies have been dealing with supply chain issues. Even when you look at a major company like a heavyweight like a Tesla, they were dealing with supply chain issues for products. So once again, it's not a, oh, well, how do we get around it? It only comes down to, once again, supply chain. So we're going to see if the supply chain opens, if it's fully open, if it's going to be open in 2023. For sure. We got to see if it's open. We got to see, is the war, a war, or anything of the sort affecting, is it going to continue to drive the demand for global energy prices? Remember, right next door to China was Russia. Are they doing deals with them? Are they getting oil for them, or are they buying American oil? Is American oil cutting production or growing it? These are the things you're thinking about when you're looking at your predictions for 2023. So when we look at a 2023, uh, do we see a strong consumer? For the most part, once again, it we call a downside and say they're flat. Even if they're not flat, they're they can be up to the upside. To the downside, we just see that the American consumer has almost weathered a tsunami in the past 2 years. They've weathered a tsunami. They said, look, not only are we what is the American what is the world consumer saying? The world consumers are saying we have to hold strong by working and having capital. This is the issue. You're either working or you're not working. That's all it comes down to, ladies and gentlemen. So we're starting to see is there in unemployment numbers when you look at the numbers in the states, they're misleading or something. Why? Because they're at low numbers right now. So that already lets you know, yes, they're misleading. We're seeing where the government is literally showing whether they're either going to manipulate a market or not. This is where we can see global production just run flat for another year. And that won't be a problem. It will not be a problem. Why? Because they're running trillions of dollars every single year, and that's that. They're running trillions of dollars every single year. Can they go flat for a year or two? Sure can. Will they go flat? Maybe not. Because, of course, they're just going to go to the upside or the downside. But once again, we have not seen a complete fall off from the consumers in many different markets. And there's still heavy pent up demand for tech products that have been not in production, new cars not in production, and otherwise for the past 2 years because of semiconductors. Semiconductors are a major part of the world and the economy. So we're going to see obviously how those things play out. The companies that don't just run a semiconductor portion, they may have stayed afloat, and the ones that are just still heavy semiconductor and that's how they're tied down, we can see them not really make a move. That's a fact. Why would they make a move? How do they make moves? They got to make moves. They had to make moves. You can't just be stuck where you're not selling product because you don't have certain components. That's what's going on with semiconductor companies. So even with cars, they say, oh, well, luxury cars have hit the height in sales. They had the height in sales in luxury cars last year. Yeah, luxury cars are usually made handmade. So we're not saying it's a whole semiconductor chip that's got to be needed. But yes, they have been uh, at a height. And so now you're seeing where you might see a major company like a Ford or a GM or something. They might say, "Hey, we got our chips moving again. Supply chains open. We're rocking out. We had our lights out year, our best year in the past 2 years, which is what the best year in the past 2 years because they haven't had semiconductor chips." So it's really simple to see how the market may play out on the public side, but we're going to see how it plays out on the private side in general. We don't see really a fall off, and we just see once again it just still being super competitive. The world's be gotten more competitive because it's a global economy. It's definitely a global economy, and you guys are seeing the effects of that right now. You're seeing the effects of a global economy. So appreciate you all for tuning in live, listen replay. Appreciate everybody for tuning in live, listen replay. People coming to the Family Asset Protection Trust Conference, January 14th in the Miami area. Look forward to it. Once again, uh, feel free to reach out. Christian at trustchristian.com. Once again, it's Christian at trustchristian.com. If somebody reach out actually asked about the virtual. We haven't done the virtual. Don't plan on doing the virtual. It sounds good in theory, but we always tell people how much easier is it going to be for you to connect with someone when you meet them face to face and shake their hand. Granted, there's internet apps that we thought about and things of that nature, and it's just one of those things that's probably going to cost more than it is to record it. Was necessary. So we definitely appreciate everybody for tuning live, listen to replay. Everybody that's going to be at the conference this weekend on Saturday, January the 14th. Christian at trustchristian.com. Once again, it's Christian at trustchristian.com for the email. You can reach out at Christian at trustchristian.com. And we look forward to hearing from you. I look forward to seeing you. This is definitely one to remember because, people say, oh, somebody came online and asked us, well, is this person an enrolled agent? Well, they may not be an enrolled agent, but they're a securities agent. They're a securities agent. The thing that we tell y'all all the time to go get for your birth certificate and otherwise, oh, I'm gonna get me, I'm a securitize my children in the trust, and you can get in front of a securities agent at the workshop at the conference. We'll repeat it again: a securities agent. So it's they're not all the same now. That's fair. Not all securities are the same. That's fair. Don't be fooled by that. We could make it sound that simple. It's not. But oh, you're gonna try to take your kid and put him in a trust, right? You want to put your kid inside of a trust. You want to put your name inside of a trust, right? Right. Well, this is a securities agent, and they're in trust. And we got them sitting in the room, man. They're a lawyer, so of course they can have those conversations with you. We don't need to be that. We're just gonna bring them in the room for you, so you can ask them questions, so you can make sure you're protecting your family estate. Those are valid questions. How do you securitize your family? Right, but you gotta ask the right people. You can't just ask any Joe Schmo. You can't ask your boss. Oh man, I'm getting into disagreements with people at my job about this private stuff. What? How do you get into a disagreement with somebody that you know is not in the same position as you? And that's why people that have the information don't talk to people about it. So once again, this we know the value we're presenting. This is the Family Asset Protection Trust Conference. We had someone come on and ask about their kids today, even in a consultation. Oh, my kids. Well, how do you protect your kids? As a security, you got to get in front of a securities agent. We bring them in the room, and we've actually had them in the room every conference. It doesn't matter if they're a current securities agent, even if you have an ex securities agent. We definitely have had ex securities agents sitting in the room the whole time at all of our workshops because we understand. We talked about that for years. Oh man, I'm trying to securitize my family name, my family estate. I'm trying to be a state national, a Rufus Doofus, a whatever you want to be. Who cares? Get money. Be private. But instead, it turns into this, oh, whether you know it or not, there's so many that may get money and then they're going to be loudmouths. They think they're going to drive around on the internet showing off their watches in their cars. And you're supposed to be private. And it doesn't work that way. When you're private, you're private. That's the downside of it. Oh, some people always ask that in a consultation. What's the downside of trusteeship or private? Is that you got to be private. The market prediction. We see the market continuing to grow because there is a pent up demand for consumer products. By there being a demand for consumer products, people are willing to work either overtime or go get part time jobs or take jobs that they normally wouldn't take so they can have extra luxury goods. Sometimes they don't want to say luxury goods, but even in the mid tier market where you see them shopping at like they're just mid-tier clothing companies. They're not necessarily luxury goods, but still mid-tier clothing companies. You can see them, still do quite well in the marketplace. Just because they're mid-tier clothing companies, people are buying clothes. You know, the companies were really just doing a slashing house. Recently with their clothes going into winter season. Well, what do you think they're going to do in 2023? Maybe they don't completely keep the discount savings going, but at the same time, they're looking to move the same amount of clothes that they moved in 2022 for sure, and that's a major deal. They want to end for sure selling a more or if not more clothes than they sold a year ago in any market, and so we're going to see, can that be possible? Do people continue to consume at this high rate? But from what we could see, we just see, yeah, most people are going to. It's like asking, there were more people that adopted pets in 2022 and 2021 than they did in probably in any other year in history. So when you see these expenses that people have incurred, people aren't just going to give up their dog. People, they're going to feed their dog. So those are things that you can almost bet on. Once again, they're going to feed their dog. That's just the bottom line. So you're seeing a transition to once again a more Uber like lifestyle for people in the West that are enjoying first world amenities. They're looking to enjoy continue more first world amenities. You know, that's almost like, why does a company like a Spirit Airlines still keep its head reared ahead? Despite the seats and the prices. Well, why? Because people are willing to travel in cheap flights. People are still willing to go get on a cheap flight like they're willing to go get on a regular flight. They're gonna go. They're looking to travel. That means it's a pent up demand. So appreciate everybody tuning in live, listen, replay. Look forward to seeing the people at the conference this weekend on Saturday. Definitely looking forward to it. It's in the Miami area, not too far from the actual airport, which we always make it a point to accommodate that for trustees. We were telling a trustee a story. We remember seeing trustees run to get on the airplane after the workshop because they just were in and out. Now, some people might look at that, how could you laugh? But the truth is, it's a beautiful thing to see people put the priorities where they need to put them. That's what it comes down to. Did you put your priorities where you wanted to put them? Appreciate everybody for tuning in live, listening, to replay. Look forward to seeing everybody at the actual conference. Christian at trustchristian.com. You can register. Once again, that's Christian at trustchristian.com. Look forward to hearing from you. Peace and joy.